Hey investors, Joe here. I'm excited to talk with you about the market today. This is, in my opinion, the best day we've seen all year as far as technical action, and it is definitely time, in my opinion, to tiptoe back into the market, and I couldn't be more pleased. I've been sitting in 95% cash for a long time, and it's gotten pretty boring, but finally I'm gonna dip my toe in. Like I said, let's look at the market indexes, and then let's look at their ETF equivalents, QQQ, DIA, and the SPY, and talk about where we could buy those, make a strategy, and maybe instead, or in addition to, maybe you want to try a market stock. We'll talk about what that is. We'll talk about Apple and Tesla, and that's 2/3 of the mega trade. Those of you who've been following me and the mega trade, I've been what am I trying to say? Contemplating. Wow, I don't know why I couldn't think of that. So we might as well look at BJ too. It's not quite set up yet. And before I begin, this is not investment advice. This is just for entertainment, just for education. Not a financial consultant. Invest at your own risk. I have been investing since 1996. That's 25 some or so years. Proud member of Minervini Private Access. Proud member of MarketSmith. Let's get started. So here we see the 1-year chart of the S&P 500, the 500 biggest public companies. And as you can see, we had this huge bullish engulfing day. Let's measure it. So it ranged almost 6%, crashed hard on the Fed news this morning, and rallied strongly for whatever reasons. Let's not even talk about the why. The mutual funds, the institutions decided to buy today, period. Let's just go off the technicals. So when you have an extended downtrend followed by a large bullish engulfing day, when a big white candle completely engulfs the previous day, and this actually engulfed 3 days, when you see high volume, which indicates a whole bunch of shares changing hands, and that's the highest volume in quite a while since, oh, look at that, the last bottom, June 17th. And look at that, the last bottom, the one before that, sorry, May 20 something or rather. This is, it's not guaranteed, but the odds are definitely in our favor that we are going to see the start of a market rally. Where is it going to rally to? I'll tell you that when it's done rallying. The obvious points would be 3,900, where we see some supply. This would be, well, of course you have 3,800. Then you've got 3,900, but I suspect it will run up and touch or get close to the 200-day simple moving average, just like it did last time, and then it will pause out. We can look at the same thing with the NASDAQ. I mean, it's almost a carbon copy. You got the huge bullish engulfing day. You've got a little bit lower volume. That's disappointing. Lower than the SPX, but still pretty high. And where's it going to go? We don't have quite as much of a delineated supply line. So my guess, and it's a guess, is that we will run up close to the 200-day moving average, which will be, oh, I don't know, what is that? 12,600, something like that. So I personally am going to tiptoe into the indexes tomorrow. And if you are buying into the indexes long term, this will be a good day to put a little bit in. And I'm going to be very careful here. Now, you can pick your poison here. You can pick the Dow Jones Industrial ETF, DIA. You can pick the NASDAQ, which is QQQ. You can pick the S&P 500, which is the SPY. So let's look at the S&P 500. Here is the SPY. Here's the game plan. If you want to be super aggressive, you can set a buy stop above today's high, which is 367.51. Set it at 367.52. If the market opens to the upside, your buy hits. If you want to be a little bit less aggressive, a little bit safer, although nothing's safe in the market, you could delay an hour or two and see if the market is green, if it's acting like it wants to confirm today's big move. If you want to be really cautious, you could wait near the end of the day and only buy if it finishes strong. So the more aggressive you are, the more money you can make, obviously, but the riskier your trade is. Now, it might go inside. It might sell off tomorrow. It might sell off for a day or two or three and just tighten up in here, and that would actually be really good. If we just saw a tightening movement here, then we wait, and let's wait for it to break to the upside. If it comes down and breaks beneath today's big candle, then our bullish exuberance is invalidated and we are in for more pain. So that's where we're going to set, that's where I'm going to set my stop. I will probably, I think I want to be, play a little bit safe. I'm going to wait for a few minutes after the open. If the market's up, I'm going to buy just a little bit, and then I'm going to set a stop for this. I'm going to have a really tight stop just because I don't trust the market right now. Maybe you do. So I will buy a little bit, and this candle is almost 6%. So I will probably do a stop at 355 right underneath this potential support, and then a stop for the other half of my shares at the bottom of this candle, which is 348.11. So I'll go 348.10 or something along those lines. And then if it finishes really strong towards the end of the day, I'll probably do a little add-on. But I'm tiptoeing in. I'm not, this is going to be a small position. A bull market lasts weeks or months. We don't need to nail the bottom. No one's going to send us a trophy if we buy, the day after the market turns. We're going to have the whole rally to work with. Now you can do the same thing with the diamond DIA, same strategy that I mentioned with the SPY. You can do the same strategy with QQQ. It's pretty much the same setup. And then for goodness sake, take some profits. If we are fortunate enough to start capturing some of this rally, sell a little off when it gets here at 385 or so, sell some more when it gets to the 200-day, or at least tighten up your stop. Be ready to get out, unless you're doing a 10 or 20-year hold, and then, you just keep holding. Now, alternatively, or in addition, you could buy a market stock. What is a market stock? A market stock is the big caps, the big, strong, good company big market cap companies that tend to move with the market. That's why they're market stocks. When the market goes up, they go up a little more than the market. When the market goes down, Apple goes down a little less than the market. Tesla goes down a little more, as maybe you've noticed. So same kind of thing as the indexes, guys. Look at this huge bullish engulfing day. Nice volume, not incredibly impressive, but nice volume. So we could do the exact same buying strategy as I mentioned with the indexes. And this thing just moves with the market. It tends to blow through support and resistance. Look at all this overhanging supply, and yet when it rallied in June and July, it completely ignored it, and it just went straight up, at a 45-degree angle. This supply did not hurt it one bit, and I suspect if we get a general market rally, it will do the same thing and run up 45 degrees and probably retest 176 or 175 or get close to it. That'd be a good spot to start lightening up. Maybe you take some initial profits halfway up. Now, you Tesla fans, including me, I got my Cybertruck shirt on. I was going to make a video saying you might want to try to play a bounce off of this support, but I've been busy. But we got our bounce off support. Now, what you don't want to do, what I used to do, is I'd be like, oh, there's support down there at 207. I'm going to set a buy limit at 207. And then the limit hits. Sometimes it bounces. Sometimes it keeps going down to 0, right? Don't do that. Wait for the stock to bounce like a tennis ball. We got our nice tennis ball bounce. Volume was not amazing, but I think you could do a similar play where if it's up tomorrow, buy a little bit, set half of your shares for a stop, halfway in the middle of the candle, the other half of your shares just beneath yesterday's candle. If you're wrong, you just get a little paper cut. And if you're right, you finally start making some money. If this works, obvious place for it to start selling off would be this overhead supply at 270. So maybe you sell some at 265. Although we got a gap to contend with, that's a problem. Well, we're going to have resistance at 315. We'll see. We'll see. I'm definitely going to go small with Tesla here. I know earnings are coming up on the 19th. That could help. But you never know with earnings, do you? Now, what else did I want to tell you? So let me show you my super secret stock in a minute. But to recap, I'm just going to tiptoe in. You got to think safety first. Don't think about how much money you can make tomorrow. Think about how much you can lose. Tight stops, small positions, progressive exposure. I'm going to buy 1, 2, or all 3 of the indexes, ETFs. And I'm going to buy just a tiny bit of Apple and Tesla too. I might get stopped out of all of them for a 2.5 to 5% loss. That's okay. It's a paper cut, which will suck, right? Paper cuts hurt, but it's not going to do any permanent damage. So, BJ, if you watch my video on the mega trade, this is kind of a modified mega trade. I'm starting positions in Apple and Tesla. But BJ, it's not quite set up right. You got this nice double bottom. You've got a nice breakout, but it got pulled down with the weight of the market. It's bouncing off the lip of the cup. It's textbook, but we need to see it tighten up. This is still too wide and loose. You got some overhead supply here. I want to see it tighten up here. It might just go tomorrow, in which case we'll have to wait for a better setup, or I will have to wait. So I'm going no go on BJ tomorrow. Now, I am bursting at the seams with this top secret stock, DCGO, bringing back the house call. So Teladoc does virtual doctor visits, but no one wants to do those. I don't want to do those. Zoom scares the heck out of me, right? You too, probably. And I sure as heck don't want to go sit in a traditional doctor's office. So DCGO, the doctor comes to you and they do urgent care and they do minor situations and this and that. I don't know why I'm explaining the business model to you. You can figure it out yourself. I will link their website in the description. But look at this. I'm going to do a whole separate video on this stock if I ever get around to it. But you got a nice double bottom. Yeah, it's a little deep, I know, but this market has been severe. You got an awesome shakeout. You got good reaction to earnings. You got a cup with handle. The handle bounced right off the 50-day like clockwork. Now it's making a cap due to the weakness of the market. If this is up a little bit, I'm actually already in it. I bought it right here. If it's up a little bit, you might try to just buy a little skosh or wait for it to tighten up just a little bit more. But yeah, if it's up tomorrow a little bit, I will add some more to my position. Obvious places for stops would be like 1045 right here. And if it's a very small position, how big is, hold on, we got to measure 10% max. Yeah, look at that. It's at 18% now. It's really too far. I would just do an arbitrary 10% stop right here. Oh, look, there's 10. I do it at like 997 or something like that. All right. Well, I sure am excited about the market's movement today. I am going to be mad as a hornet if this thing rolls over tomorrow and sells off sharply. But we have to be prepared that may happen. Let me know what you think about any of this stuff. And hey, I do not have a regular schedule for publishing videos. I just make them whenever I have time. Try to get one out a week. But if you might want to hit the notifications bell so you can be notified when my next video comes out. And also, I just put merchandise on my channel. You can buy a shirt or a coffee cup. I just ordered a coffee cup. I'll show it to you when I get it. All right. Good luck in the market, everybody. Be careful. Take care.